Our discussions about the taxes and reliefs in the 2026 budget will not be going away anytime soon, because just about 2 days ago, if my education or my information is right, Parliament passed a revised VAT bill, and that could see that businesses will not pay the COVID-19 any longer. Also, the effective VAT rate that they'll be paying will now be pegged at 20%. And also there are some reliefs that will be offered to them. But how would all these things, now that that bill has been passed, impact on the cost of, the real cost, if I should say, of doing business in Ghana today? We're getting some education from a tax person and also for somebody who is playing in this business space. And also Bank of Ghana has dropped its policy rate by some 350 basis points to about 18%, if I'm right with my facts. But how would that also impact on doing business in this country in terms of the cost of lending and those who play in this space, and what does it actually mean? So on PM Express Business Edition tonight, we're looking at that revised VAT bill and also the policy rate cut. How would all these things lead to reducing the cost of doing business in Ghana today? Let me bring in some numbers for you to have some real understanding here. Look at the monetary policy rate was cut to about 18%. This, we understand, is the lowest since April 2022. Now, that's a graph there giving you some trend analysis of where we were in terms of the policy rate and where we are right now, being the 18%. And we've seen some 350 basis points. We understand that. How would this impact on the average interest rate we have in this country? As we understand, it's somewhere around 21%, 22%, and all those things. So we'll see how all these things will play. In terms of the 2026 budget, there's implementation of a tax system within the digital economy. Stronger tax administration, improved compliance is expected to boost domestic revenue. I mean, I've had this compliance issue since I was in school, but still we've had instances where we're struggling to meet our target. Would that betting on this compliance thing actually get us the results or not? To be getting some understanding here. And also complete rollout of the unified taxpayer identification system. And how would this also impact on collections and also simplifying the process for businesses? Reduce the effective VAT rate. And I'll get some understanding on this whole idea about VAT rate and effective VAT rate from 21.9% to 20%. Is that the real VAT we'll be paying come January 1, 2029? Also raise the VAT registration threshold from 200,000 to 750,000 for businesses, and also extend the VAT zeroing rate on supply of locally manufactured textiles to 2028. So let's look at how typically, if you should take a price of about 1,000 Ghana cedis going forward, the current, you'll be paying about 10 Ghana cedis, 25 Ghana cedis NHIL, 25 Ghana cedis get fund, and also the VAT itself 159. Now that is the taxes that you're paying if any item is costing you about 1,000 Ghana cedis. Now under this new scheme, actually, you look at no COVID-19 levy, you still have the NHIL, you have the get fund, and you have VAT at 15%. So saving some 19 Ghana cedis if you bought maybe a cloth for that amount of money. Let's look at the VAT reforms here. Also, you're looking at COVID-19 levy being abolished, of course, get fund, NHIL being decoupled. Also, do some 101 here, and also no VAT on prospective when it comes to the extraction industry. And VAT registration threshold has been increased, as you heard there, from 200,000 to 750,000 Ghana cedis. That should be an analyzed threshold. So let's look at this and about what COVID-19 had brought in, or what they brought in, or what it brought in. And you're going to lose about 3.8 billion Ghana cedis if this thing is no more. Is it a gamble on the part of government or not? So those are the numbers, trying to place the issues down for you. And in studio, I'll be joined by, or I have been joined by a tax expert, Francis Timoboy, lawyer, Esquire, in studio with me, and also Chief Executive of the Ghana National Chamber of Commerce and Industry, Mark Bedu-Abuaji. Also on Zoom, we have the Head of Research at the Ghana Association of Banks as well, giving us some numbers in terms of the real situation on the ground. So let's first start with Timo, with this VAT thing that has been passed. The economists will say, all other things being equal, can the implementation take off as expected from January 1, as being promised by the GRA Commissioner?
It's not everything that can take place 1st January. Some can take place. For example, the recoupling can take place. So
what does it mean with this whole decoupling thing? Just 101 trying to explain to us.
You remember in August 2018, I think that was July, the then finance minister said that levy, properly so called, should not be deductible. In other words, if businesses pay for those levies, you are not entitled to refund from government. So they separated the levy from the VAT system. So immediately you're a business and you buy, you pay it all right, but unlike the previous where the government will give you a refund for the input, government said they're not going to give you that. So the entire amount was going to government. And that ran from August 2018 to today, as we have it. The implication was that upfront, businesses were going to suffer 6%. So instead of you getting a refund, because businesses are not consumers, they produce and then you and I will go and buy. Then we are supposed to pay those consumption tax. So anything they buy, they are supposed to be credited with the input VAT. Businesses were now forced to absorb it. So the whole system behaved like a VAT system, but a sales tax mix. And around the sub-region, it looks like we were the only people who were implementing that tax system. It had a negative effect on the revenue performance. So that's why this government says that let's resort back to the original pure VAT system. That's why now we are allowing the businesses to, claim the input VAT. Again, in the calculation, because they were levies, you had to you needed to add it back before you apply the VAT. So with nominal numbers, instead of 15% plus 2.5 plus 2.5, and then plus 1%, which will give you around 21%. Because of the effect of added on, you were getting 21%, 21.9%. And that is what we call it the effective rate. Because some must be added. So it's like tax on tax. So some must be added before. So in this budget, fortunately, we are now seeing that remarriage coming back. And effectively, it's going to reduce the tax rate from 21.9% back to the normal 20%. And that is more like a savings or a relief to businesses now.
We do describe our tax system as quite complicated because, even me, sometimes I struggle. How much more that SME that we are trying to bring into the tax bracket? And I know this whole argument about tax evasion and tax avoidance. And so don't we set up that trap for people to try and avoid the payment of these taxes? Because some are saying that it is quite a complicated structure.
It is. It was very complex in terms of compliance. And if you don't have people who understand mathematics, you always make mistake. Sometimes you have to add. In fact, we were filing about 5 returns at a go. And if you make mistake in one, it affects everything. So clearly, it was complex. And because our policing of the VAT system was not robust enough, people had no choice than to evade. And that is why if you take about 35 African countries, Ghana was the least in terms of our VAT contribution. Even though we are, economists will tell you that we are a developing country and we are consuming. And the more we consume, because these are consumption taxes, the VAT is also supposed to increase automatically. But we are developing, people are building, buying cars, yet VAT was not increasing. And so for me, the whole system was very complex. But the VAT arrangement we did in August was a disaster to our system. And for me, I think that it is good and refreshing that we are reverting back to a proper VAT. Still, we are a very high rate because 20% is still high in the sub-region. But I believe that now that we are making the business environment more of agents collecting the VAT, but not consumers and therefore paying the levies, at least they are freed a little bit. And if we're able to enhance compliance, realize that VAT will pick up and things will resort to the normal position.
I'll come back to you about whether the structure set up that trap for people to evade. But before I bring in Magbedu Abaji as well, why is it that despite the passing of the act by Parliament, not everything can take effect from January 1? I mean, just to get some education from you about getting some education. Why is it that despite this bill being passed, all these taxes, the implementation can't take place from January 1?
There's a major part of the reform which is dependent on technology. You remember the fiscal electronic device is going to monitor the VAT collection for a group of people within the sector. And looking at the way our procurement systems are, I don't think we even have it now. So we can't roll over that electronic fiscal device part of the reform immediately. So I believe that those will come along the line. Again, there's a major part which is to boost compliance, which is the VAT reward system, where government says that if you buy, make sure you demand receipt. Now, we need to make sure that when your receipt comes in for the reward, and it's more like a lottery, many countries have done that, where, for example, you go to a shop, you buy an item, we sample it and put it in a drawer. You can win a car, you can win a phone or anything. So when you are buying, you now demand and you are forcing the businessman to charge the VAT and account for it. Those receipts needs to be generated from the electronic system. Those systems, I believe that we can't implement them from, we are in almost December. 1 month, I'm not sure we can put them in place. Businesses even have to, reconfigure their ERPs.
And there's a business person who asks how ready is it for that?
I don't believe that they can do that within this shortest possible time. But it is good that part of the systems can start, and then maybe by middle of the year, everything can be rolled out.
Mr. Boaja, I know you several times have complained about the cost of doing business in these discussions with us. Are you that excited, or only for twist you want more in this whole VAT reforms and reliefs and all the rest? And finally, that bill has been passed in Parliament. And even though not everything will take effect, but let me first get your thought basically on this whole reforms thing and whether it brings some relief to you, because I know how you've been passionate and about your members about the cost of doing business in this country.
Yeah, George, let me say good evening to cherished viewers and also congratulate you for winning the, the media personality.
Thank you so much.
At the 5th Chamber Business Awards.
Yeah, thank you so much.
But we appreciate your work in trying to bring an enabling environment for businesses. Your engagement with the private sector has been top.
You're making my head very big.
I mean, I was even expecting the plug to be placed here, so Ghanaians will know the good work that you have done. Keep it up.
Thank you so much.
The Chamber, we also appreciate your
so
collaboration
much.
with you. And I know that together we can move businesses forward. For me, I think it's one of the highest points in the 2026 budget. As he said, that structure is a disaster. And something that since it was, I think it was 2018. In fact, from 2019, when we realized the impact of that structure on businesses, in almost all our budget input, we always asked for a reform. It didn't happen. In the engagement with the then presidential candidates, I mean, we met all of them. And one of the issues we raised was this VAT issue. And if you remember, the MPP presidential candidate clearly said that he has studied the VAT system from other countries, and it was one of the things that he was going to do. The NDC also made that commitment as well. So we've been looking forward for this. In the 2025 budget, it came up, and it was an excitement, a bit of it was an excitement that at least COVID was going to go off, and there was also going to be a reform. For us, it was very key. The issue is that probably it took much longer time, but we had a very fruitful discussion with the IMF and the World Bank, and using the Ministry of Finance as well. And we made significant input into this particular reform. The structure in itself, very complicated. So that part that translates into direct cost to businesses, there's nothing you can do about it. And most businesses at that time were struggling. There's no way they could also absorb all this almost 6%. So we were forced to also pass on. So not only businesses, consumers were also suffering from that. And the fact that you pay VAT on VAT, a consumer is always want to enjoy more. if there is anything that will prevent the consumer from getting more value for money that they are paying, they come to a restaurant or whatever, they eat, they look at the VAT alone. If you are not careful, the next day they'll prepare their own food at home and they will not come. So it's been affecting us since this particular VAT was introduced. And as you said, within the sub-region, even in Africa, I haven't seen this kind of structure where you combine the standard VAT and the sales VAT. You know, most of the business are SMEs. At that time, the threshold was at 200,000. Yeah. So a lot of the SMEs were supposed to pay or collect this VAT. Computing it itself was a challenge. As you said, tax evasion, tax avoidance, some may not want to say I'm evading, but the computation in itself, so it became...
Did the current structure breed a lot of your members trying to avoid? The avoidance is not the one that is criminal. I always say that, you know, avoiding it is not the evasion is the criminal one, right? Help me.
Yes.
Yeah, so they didn't breed, so push a lot of your members to devise strategies to lessen their tax obligations.
No, I don't think so. You see, if you are supposed to pay and you fall within the threshold, you have to pay. There's nothing you can do. But the difficulty is, because there are sometimes they are so small, and the 200,000, a lot of businesses were within that bracket.
Threshold annual. I mean, you should be making a sales of like maybe 50 cedis a day. I stand to do
20,000. Yeah, so obviously it was a big challenge, and also increased the cost of production. Looking at other challenges that we were facing, I'm happy that this reform obviously has come. I'm looking forward to its implementation as well. In fact, in our engagement with them, one of the issues we raise is that beyond the reform, they should also look at the effective VAT rate, because we have scanned across even the sub-region. And we realized we heard of 20. So in our engagement, we were asking for, something much lower, even for a start.
19, 17?
18 for a start. Because we are competing with businesses from other countries. Now we have a global village. When you go to the market, your product should be able to be competitive and also be able to sell. So if you have even a VAT rate that is much higher, and look at it, you cannot also claim an input VAT on the one you pay. So it becomes also a challenge to us. So we are asking for 18%. Obviously, 20% after engagement, we realized that maybe it's a start. So we will accept it for now, even though it's quite high. And we are very hopeful that, I think the minister made a very profound statement that if this 20% is able to improve or increase our revenue, then the subsequent budget, they will look at decreasing it. So the reform for us is top notch.
Let me come back to you again.
And even the fact that COVID-19 thing is not there. Today I had a meeting with, some media engagement with the Nigerian TV station.
Okay, sorry.
And we were talking about COVID-19, and they were surprised that we were still collecting COVID-19 at this time. And when did we even start? When did COVID-19
But it's bringing in 3.8 billion. What it's bringing in is more than what the extractive sector is bringing in as revenue. It appears that it came in to fill a very big hole in the budget.
You see, a research shown that if you improve not the rates, but your compliance, right, you are likely to increase your revenue between 15 to 25%. That is why I think that they have moved from a very complex nature that may even prevent people from paying, to now a very simplified, a very fair tax system where everybody will be able to pay, calculate and pay. I'm sure that if the GRA should do a lot of education, a lot of sensitization, I'm sure that this will bring me more revenue than when all this NHIL and all those things were part and the COVID-19. And with this, let me assure the GRA that as a business association, we are also going to collaborate with them.
And it comes back to my question about whether your members are now going to fully comply in terms of compliance, now that all these things have been done, because the government is betting on compliance to fill the hole. And so are your members going to comply with these new tax measures?
Let me assure you that they will comply. It's actually illegal for you not to comply. And the danger is those who collect it and keep it.
Yeah, they do it. It's a practice.
It's a practice. So that's why I said a lot of education and sensitization should go. I know the GIA, they have started. And I said, we will also provide our platform for them because we have the businesses and we want to work with them to sensitize them, let them know the effect for you not paying. Because even today I heard that you can't even go to prison. And if you are caught, you can pay.
But that has been on our books always.
I mean, so it means that the sanctions should be implemented. This, I think, will deter people. If you are caught and, I mean, you've taken to prison or you are asked to pay 3 times what you are supposed to pay, I don't think next time you do that. So let us all, as Ghanaians, we need a tax. As businesses, we ask for a reform. A reform has been done. So I will encourage all businesses that the little that you have to pay, we all have to pay. And then I think we have a very...
The minister is betting on compliance to reduce the rate further. Does it give you some excitement?
It gives me an excitement. That is where even the business will have to comply. Because when you comply and the ratio can't even come to 15%, you would have saved a lot of money. You would have saved a lot, reduced costs, and you have also given benefits, real benefits to your consumers. So let us all comply. And I think that with this information, and then with the fact that compliance is very key, and I think that they've also outlined a number of processes, a number of things that they have put in place to ensure that it enhances the compliance. I mean, if it's digitalized, it takes away that human intervention and be able to assess your tax. They will know wherever they are. I mean, in Rwanda, those that are using digital, when you sell, they know how much you have sold from their office. So if there is any illegality, any kululu in there, immediately they will be able to know and then get you to pay. So let us all comply.
Mr. Timoboy is explaining to us that not everything will take off from January 1. Again, is that a concern for you? How are you also trying to calibrate your system? Because it's a whole lot of work. I mean,
it's a whole lot of work. I totally agree. I would have loved that January 1 we are able to start so that whatever benefit...
But the Commissioner General has given us his word that as soon as the act is passed, when the law is passed, he hasn't got any option any longer to press ahead.
Now the act is passed. I think it's left with the that sense.
And once can happen within a day or something.
Within a day. And I think that whatever we need to do within this time, I think we need to put in a lot of effort because the government also needs a revenue. I mean, if you have a government which has significantly reduced expenditure and also trying to increase revenue, then I don't think there is a need for even the GIA to delay in ensuring that they put in place all the necessary measures for this to be collected by 1st of January. And that the businesses will now, I mean, people have started thinking about how they can recalibrate whatever machines they have to be able to charge and collect this VAT. So they have started working on it.
I mean, are we not gambling? And I've asked this question at this program before. Isn't it a big gamble? Because I've heard about compliance before, that we are betting on compliance to fill this hole about 6 billion or 7 billion Ghana cedis based on these relief that we have extended to businesses. Some are saying that it's a gamble.
To some extent, we are gambling because, one, compliance doesn't take off just overnight. It takes time.
2 years, 3 years.
Yes. And you see, we have lived with a system where education, people ask themselves, the tax I'm paying, what are we using it for? So the GRA has launched the sustained tax education. Now, I think at the launch, the Deputy Finance Minister said they are now going to tell Ghanaians what the tax money has been used for. That will take time.
HIPIC benefits.
Yes,
put it
like
on the building,
So people are now going to see, oh, this is what my tax money is being used for. It will take some time. People hear corruption going on. Oh, so our tax money, is that what you've been using it for? So it will take some time for them to, accept it and now say, look, I'm now seeing taxation as a community investment or contribution to fund my road. So to some extent, it's more like a gamble. But I think that there are measures that have been put in place. So for example, the threshold that has been increased. We have cut away a number of companies so that GRA can now focus on the medium-sized entities. So if you are selling 750,000 a year, you are not a micro entity. I mean, from 200 all the way to 750, we have now pushed a lot of them back. Those who are not significant, let me put it that way. so that we can now police. And that's why in the budget they are saying that aggressive tax compliance is going to be seen. So I see 2016 as, you know, a year of compliance. The government has thrown away a lot of money. So if, for example, like my brother Abuaji said, if you collect the tax and you don't pay and they get you, then it means that you'll be in trouble. They've reduced the effective tax rate. They have now granted you input-output, which has brought down your cost of doing business. COVID-19 has been scrapped. So more of the effort is going to be on compliance. So if we're able to enforce the compliance with the sustained tax education, we are bringing in the electronic devices to monitor how much you sell. All of this and put together, I believe that even though it appears we are gambling on compliance, if we're able to implement them well, we will be able to raise the revenue.
I'll come back to you and I'll get you the question about looking at the structure of the economy and the informal nature of the economy as well, whether there's room for us to gamble or so. But in all these discussions as well is the reduction in the policy rate. And I'll help me out in the cost of doing business and the tax compliance connection as well. And because the Bank of Ghana, a day ago, dropped its key lending rate to commercial banks by 350 basis points to about 18% right now. Let me bring in someone from the head of research, acting head of research at the Ghana Association of Banks, and help me do some 101 education here. So when are the commercial banks going to respond accordingly when it comes to the Ghana reference rate, now that the cost of getting access to credit from the central bank has gone down by this amount or this percentage? Mr. Saki, help me out and take me to the classroom. When are you going to do that? Is it your next Ghana reference rate or what? Help me out, Mr. Saki.
Yeah, so once again, good evening to you, George, Mark, Francis, and your discerning viewers. I think the question is not when we are likely to see a decline in the lending rate, but as it stands now, if you look at the data from January to this point, we've seen that there's that correlation when it comes to a decline or a decrease in the policy rate and then that of the lending rate. So for now, I think once the policy rate is out, the policy rate is currently out, so the key thing is the computation of the Ghana reference rate, which is the benchmark rate for the industry. And since the policy rate have now dropped to about 350 basis points, we are expecting at least about 20 basis points deep in the Ghana reference rate, which is the benchmark rate for the banking industry.
And that will take effect in the first week of December, right?
Yeah, the first week.
By possibly next Wednesday, right?
Yeah, precisely.
How many of the commercial banks, and let's be realistic here, are actively working with the Ghana reference, which is the 17.93? I stand to be corrected on that one. That is the benchmark, the 17.95 as we speak right now. How many commercial banks are working with this Ghana reference rate?
Well, the Ghana reference rate is the benchmark rate. It doesn't mean that banks are going to lend to businesses at that rate. So it's just a signaling rate for banks to use in computing the actual lending rates for businesses. So aside the Ghana reference rate, banks now have to factor in at least the risk profile of what the customer in determining the actual lending rate. So even though we are expecting maybe the GRR, which is the Ghana reference rate, to dip up to 15.7 or approximately 16%, doesn't mean that businesses will take credit at 16%.
Help me out, help me out, Mr. Saki, for this rude intervention. The Ghana reference rate, as we speak right on the November rate, is 17.93. 200 basis points should be going around 15. If my math is right, and my accountants here will help me. You're looking at around 15-something basis points, 15-something percent, right?
Yeah, so basically we are expecting about 15.7 because looking at the computation, because the Ghana reference rate is a derivative, which is computed using the policy rate, the fiscal policy rate, and which is using the 91-day treasury bill as a proxy, and also the interbank rate. So these three variables come into play when computing the Ghana reference rate. So looking at the rate at which the treasury bill rate has dipped and also the policy rate now dropping to 18, we are anticipating, and now if you look at the interbank rate too, which is another variable used in computing the Ghana reference rate, it's around 20%. So we are expecting that through this computation and using the linear model in computing the GRR, we should see the GRR going downwards around 15.7 thereabout.
Mr. Saki, I mean, often you were told that you factor inflation as a critical input. Inflation is around 8%. The Treasury bill rate, I think, has gone back to the 10% rate and has started to be corrected as well. Shouldn't we be going lower than 15% as being quoted? Because if you look at the average interest rates, according to Bank of Ghana data, we are doing somewhere around 22%. Some are saying that, are we just not finding excuses?
Well, it's based on the system that we use in the determination of our interest rate. So as it stands now, when you look at the 91 Treasury bill rate, it's 10.8 as of November this year. That of the monetary policy rate is 18% now, and then the interbank rate is 20.92. So if you are using the weighted average of 40, 14, and 20% for these three variables, I think the likelihood of getting something below the inflation is virtually impossible. So it's based on a framework in determining what the lending rate in our economy, where we factor in the monetary section, the fiscal section, and also the banking sector component.
And therefore Sorry, you're making a point, sorry.
Yeah, so until probably we revise this model, I don't see a way where we will be benchmarking lending rates to inflation.
The single digit, is it feasible in the medium term or possibly next year if we are still going on this path?
Well, for now, we can see some level of coordination and complementarity between the fiscal and the monetary policy framework. So for the short and medium term, we should at least stay within that particular bandwidth of 6 to 10% at the optimal inflation level. So it all boils down to policy consistency from both the fiscal and then the monetary side.
Do you also factor the non-performing loans thing in the computation here? Because I know that I will never get even 16% if I should walk to any commercial bank. That would never happen, and it's a fact. How is this non-performing loans thing also a factor in here in pricing of loans now that the policy rate has gone down? Yeah.
So even though policy rate has dropped, we still have NPLs quite high, around 22%, and which basically tell you that the probability of default is 22 within the country. So if you are lending about 100 cedis, there's that likelihood of losing at least 22 cedis out of it, which is a risk to the banks. So in giving out loan, that is also factored in the risk profiling and also the entire lending rate determination. So until we correct the credit system and the culture within an economy, we'll be seeing all these variables drop, which is the monetary policy rate, the 91-day Treasury bill rate, and all. We see all these variables dropping, but we won't see the exact magnitude decline in our lending rate, because all these are variables that are considered in determining interest rate. So it behoves on us as a country to ensure that once we take credit from the banks, we pay back, so that the money can be extended to another business person or another individual.
Saki, I'll come back to you for some education again on what this thing will mean for those who locked their negotiated loan in a fixed rate and those who did the variable rate, and what this would mean for them as we speak right now. Mr. Boaji, I mean, another excitement for you. Policy rate has been very passionate. You've been very passionate about it, and
obviously
the drive. Yeah. Now you're doing about 18%.
Yeah.
Let me first get your initial reaction about the action taken by the Bank of Ghana, the reduction in the policy rate, and what do you make of it?
Well, obviously, it didn't come as a surprise to me, because looking at the dynamics and the environment, we had predicted at least 3.5%. So that was our minimum. Just scan around the variables. Inflation, I mean, it's gone down. The disinflation process that we started has been very positive. It's gone down significantly. As you said, now we are doing 8%. And then we are hoping, I mean, from projections, we will do about 6%. If you look at the difference between inflation and the then 21.5%, it was about 13% for the real interest rate, which was very high. And that is supposed to even drive investment, drive people bringing money. That money was not coming. Secondly, if you look at even now, the 8% and the 18%, you have a real interest rate of about 10%, which is still very high. At that time that the policy rate was 21.5, we were told that banks were giving facility below the policy rate, which of course shouldn't happen, because the policy rate should have been the minimum for which a bank will give facility to anybody, which means that at that point, there was a disconnection somewhere, there was misalignment somewhere. So we were expecting the policy rate to come even to 15%, just to make sure that we align with the other key variables that we use in assessing. In fact, the expected inflation is also well anchored. That is why the minister said the end year inflation for 2026 is 8%.
The governor is saying that they're looking at about 4%.
Obviously, so if you are looking at expected inflation, it's 4%, then I'm sure and hopeful that the policy rate will trend downwards at a faster rate. I think he said by the time he leaves, I don't know whether it's the policy rate or lending rate, he's expecting that it's supposed to be 10%.
Yeah.
For me, it's one thing that I'm going to hold him to. And if he's able to do that, then for me, he has done what I expect him to do, and I'll be very happy. If you have an economy where your lending rate is that high, no matter what policy you bring about in terms of industrialization, be it one district, one factory, be it 24-hour economy, it won't work. Because those policies are supposed to be implemented by the private sector and not government. Government won't do any business. So if a private sector person is going for a loan as high as 35%, and now it's 25%, obviously you will make profit for you to expand. So if you really want to stimulate, of course, that's what I think that they are doing, to stimulate private sector activity and to help change the structure of the economy, then one of the things they need to do is to look at interest rate. So I'm happy it is trending downwards. But the policy rate at 18%, necessary but not sufficient, because the ones that will drive the lending rate are the banks. In fact, there is always a time lag. When the policy rate comes down, the banks, sometimes you use 2-3 months to be able to adjust. But when the drop is very significant, the adjustment is also very fast. So I expect that this adjustment, 3.5%, in fact, you won't hear policy rate dropping by 3.5% anywhere.
That's huge.
0.5, 1% is even on the higher side. And the effect of it is very huge. It's because we had a very high policy rate. That is why it's dropping at that level. So we are keenly waiting to see what the commercial banks will do. In fact, the reduction from the 28 to 21.5, we've seen some positive signs. You've seen lending rates trending downwards. You say you don't get system. I know some banks are doing personal loans of 15%. Yes. And
I qualify for that? I'll come to Mr. Saki to help
you qualify. For me, it's very important.
15% per annum?
Yes, some banks, personal loan. But we are looking at loans that they are giving to the businesses. He said they look at your risk profile. In fact, a lower interest rate is even to the benefit of the banks. Because any time interest rate is low, the non-performing loan is also low. So banks will make more profit. So if you are doing a proper risk profile, you don't have to put somebody's higher risk on somebody who is also paying. So if you are doing a computation and you say that because people are risky and the non-performing loan is 20%, so you're also going to add on, you end up increasing the policy rate and the lending rate, and you end up also increasing your non-performing loans as well. In fact, if interest rate is high, what a typical business person would do is to look for investment with a high returns. And those investments with the higher returns, the possibility of failure is also there. And sometimes not because they don't want to pay, it's because that they have invested in a high risk area for them to pay your 25%, but because it's a high risk, they couldn't pay. Some might have also invested in government projects. Coming back to this construction, those in the road sector that have done works for government, I think the minister had done well. He has made some payment. There's still a lot of outstanding payment to be made. So sometimes you don't have to blame the businesses so much. Our focus is to do genuine business. Focus is to make profit, is to expand and also employ a lot of people. So all of us will have to work together to create the right environment for us. If you look at the structure of our economy, and if you have services leading in your growth structure, it means there's a problem. Because the services is a derivative. So only when agri and manufacturing industry are doing well, then the service sector will now come and provide this support. The structure we have now is a structure of a well-developed economy, where they have already developed their manufacturing sector, developed the agri sector, and now they have the retail, the services, the wholesale and the retail distributing, they have the education, they have the financial sector supporting. But we have the services sector leading the growth of this country, and that will not create the jobs that we need. The jobs will come from the manufacturing and the industry sector. The jobs will come from the agri sector. So we should begin to think about changing the structure that we have talked about all the time. The interest rate comes down, then the businesses will now be able to borrow at a lower rate. Beyond that, the other cost of doing business is there. So it should be supposed to be a very comprehensive reduction in the cost of doing business, and then we can move the economy.
Mr. Simon, when we come back from the break, I want to establish from you the link between the cost of doing business and tax compliance. So this is PM Express Business Edition. We'll be right back after this break. Welcome back to PM Express Business Edition as we talk about the revised or the new VAT bill that was passed in Parliament, meaning that the much talked about COVID-19 is going to go away starting January 1. And also the fact that the effective VAT rate that you pay as a business is going to go down to about 20%, yeah, if I'm right, and also some other release as well. But also don't forget that in all these discussions as well, Bank of Ghana has dropped its key lending rate to commercial banks by 3.5%. And how does all these development impact on the cost of doing business in the country? Where lies the connection about the cost of doing business and being tax compliant as well? Let me get to Esquire Timor Boy. I mean, help me out. I know the linkage between the cost of doing business and the tax compliance, because now the policy rate has gone down, these taxes are going down. Where lies the connection in the tax compliance argument here?
So George, before we went for the break, I think Lawrence made a very valid point, which I think I agree with him. It appears that all the policies are working in a very good direction. There's a coordination. So we see the exchange rates from Bank of Ghana side, intervening as and when. I've heard people say that, oh, why should the Bank of Ghana intervene? But the importer doesn't care who intervenes. All he wants to see is that the dollar is cheaper for him. We can also see the policy rate also coming down. And then from the fiscal side too, the government doesn't mind losing some revenue in terms of the VAT and then scrapping the COVID-19. So all of these things are appearing to converge to make the cost of doing business more cheaper. As the interest rate is coming down, businesses are going to be able to pay less taxes, less interest, and then they will make more profits. We expect that they will be able to employ more people because, like my brother Mr. Bwaji said, paying 35% is very high. I mean, interest rate alone, 35%. You've not accounted for your electricity and all those things. So they are coordinating very well, and therefore you can see that linkage. As we bring the cost of doing business down, we expect corporate tax to pick up. Of course, the banks traditionally have been benefiting from higher interest rates. So if they reduce their interest rate, certainly their profits will be hit. But if we take away the non-performing aspect, which Lawrence explained, we expect that everything should work together to ensure that the business platform or the business environment is made conducive for people to operate, and they should be able to expand more profit and also employed more. And through that, you see that tax revenue is also likely to
go up
pick up. Take, for example, the importers who are now paying less custom duty at the port. You know, they'll be able to make profit. People can now bring in more containers. See, and the linkage now is if government is unable to enforce compliance in the midst of all these benefits which is coming to businesses, that's where government will, lose on that.
I'll come back to you about the concerns about Guta and rather they claiming that the whole restructuring thing rather affects them in terms of the cost of doing business. But Mr. Magbedu-Abaji, I mean, there's a serious argument in the United States of America about who are the real beneficiaries of these reliefs and whether businesses do plow these reliefs back into the business and employ, or they go buying stocks and bonds and invest in other risky investment, and therefore we don't see the benefit as well. With respect to these reliefs, are your members, the chamber members, are they going to plow back into the business, expand and employ more, or rather you see them buy the yacht and the private jets and all the rest, And the serious debate going on in the US about who are benefiting in terms of Donald Trump's tax reliefs and all the rest. The same argument is being made locally that, listen, you give these tax reliefs to these businesses, they're not going to plow back into the business, they're not going to expand and employ more. It rather benefits them in increasing their net worth, and you see them in the private jets and all the rest.
Well, George, I think that the benefit will go to all of us. The VAT itself, I mean, the effective VAT rate of 20%, if you buy something, immediately you are benefiting because the reduction from 21.9, I mean, almost 22%, now to 20%, no matter how small it is, if you buy more, you benefit. So there is a direct benefit to consumers from that angle. For businesses, now that we can claim input VAT on this thing, and the fact that those parts that translated into direct cost to us of almost 6 billion, I think that businesses will now begin to think about how they were going to use that part of the money to expand. In fact, a lot of businesses, to be frank with you, a lot of people have ideas. What has been difficult for them even to start and to expand is the cost of credit. Now, I'm happy that they are all happening at the same time. We've had instances where you see a tax relief that is supposed to give benefit, but you have high utility tariffs, you have high cost of credit. So people will not see the benefit. But now you've seen that the environment is improving, all the variables are moving in the right direction. That is where we'll begin to feel this benefit. As for businesses, if the person is a real investor, definitely by the time that the person wants to buy all the things you mentioned,
the yacht and the private
it
jets,
means that he had stabilized his business. Stabilize his business, meaning that if there is any shortfall, the only place the person can go is the business. And once we get this relief, cost of doing business comes down, businesses are making profit, then they will expand. Look, let's give ourselves some time now and look at possibly how things will move. If you have all these things coming up and business start to make profit, they will engage more people. In fact, when all these things happen, people were laid off. Yeah. A lot of people were laid off. People within the construction, I think I cited this example here. One of our members within the construction industry was employing close to 200 people or so. Now interest rate went up. The depreciation really affected him. Last time we went there, all the machines were there. They were left with only 10 people just to take care of the security people. Now he has started picking up. And obviously those people will come back. So I know there are...
So people who were laid off,
yes,
could be called back, those contract workers and all the rest.
When you are expanding, you have no option than to employ. Either you are employing human beings or technology, and that technology will be used by the human beings. So the expansion is what we needed, and also people starting new businesses. That is where we get the people that we needed. So I'm very hopeful that this benefit is not going to go only to the businesses to buy the yacht or whatever, but it will go to all of us. In fact, if cost of production is going down, prices obviously will come down. And that, you as a consumer, you will benefit.
It comes back to my question about some timelines here. COVID-19 was a cost input on your operations. It has gone off. That 1.54, 1.2% VAT was a cost input. That has gone off. There are other tax release measures that, all other things being equal, is taken off from January 1. What are the clear timelines here in terms of passing on these real costs to consumers in prices?
Yes.
When are we going to see that action being taken? The city depreciation has stabilized. That's another cost as well. All these numbers, and not to spite AGI, but this thing about we need 3 months to do all those things. When are we going to see your members pass on this cost to consumers in terms of cost of pricing of goods?
George, if we will be fair to ourselves, we've seen prices coming down.
Come down because of the appreciation.
Yes.
Now all these other inputs have come in.
Yes.
So now we are getting more of this. When are we going to see your members actually going to respond to us by all this?
George, it won't take long.
Long as in?
Oh, just give ourselves 2-3 months. But
that is too long.
You see,
you are paying COVID-19 levy, which was a cost
those
it's gone off.
Will be immediate, as I said.
So immediate being
that when you go to buy the thing now, that VAT that has been taken, the man selling it will not take that VAT from you. So you see a reduction. Now, the prices, that NHI, that was translating into direct cost to them. Once it's not there, obviously, cost of production will go down, and then all of us will benefit. But the computation of prices, I think we should take time to...
Aren't we just shifting the goalposts?
No. I mean, we are not shifting.
There was an example that was said, and not to be very careful here, where some are saying that Ghanaian businesses are wicked. You have foreign nationals who are operating here. And I will cite an example. When you go to some of these supermarkets that are, to be fair, owned by Indians, Chinese, Lebanese, they quickly or immediately responded by dropping their prices. Walk into the Ghanaian shops.
Do you know why?
And
all those Indians and the things that you are mentioning, they all import the goods.
I saw that same item in the Ghanaian shop. It hadn't gone down.
Let me learn. Yeah. They imported the goods. And once there is this appreciation, it means that, the cost of importing will go down. And obviously, so some of them, there will be direct and straightforward reduction in prices. So you go there, it was important, it was paying these huge duties at the port. Now everything has come down. Obviously, the prices will go down. But the prices of the locally manufactured goods, that's why I'm saying that will take some time. Because in there, the cost is still very high. What has changed? Until we saw a reduction in this policy rate, which will, of course, will take you at least 2 months for the banks to respond. The utility tariffs that we are talking about, just this year...
There's a Ghana Association of Banks on the line. We'll go to him to get him the tech climate. So you sorry, go ahead. Yeah.
Yes, just this year, we've seen 18% increase in electricity tariffs. Look, why is it that we still have this high cost of utility when inflation, which is a key component for the computation of utility tariffs, has come down to 8%, when the cedi has appreciated to that level, 32%, when cost of crude international market is still that low, and we still have this high cost of utility. That one has not reduced. We've not spoken about that. But the manufacturing company in Ghana uses a lot of electricity, borrow at that level. So when taxes and other things are going down, it's good. But you don't expect that prices will go down as drastic as you all expect. In fact, the fact that you have inflation at 8% simply means that the rate at which your prices were supposed to go up had gone down. It means that they are not increasing prices as it's supposed to be. If you look at the producer price index, the producer price index is, I think, about 1 point something, which means that the prices at which the producer is giving to those at the front of his door to now go and distribute, our transportation and VAT and all those things had also gone down. So the cost of transportation, the VAT and other things are also responsible for the high prices that we are seeing. So if you've seen some of them coming down, like the VAT, obviously, immediately we are going to see some prices coming up. But
but what about the rest? Are we having any clear timelines where we see prices go down?
Yes, obviously.
So you're still working with the 3 months?
No, that is a
2
range.
months?
That is a range. But
so it means that within a month you can see a drastic reduction in these.
It is the word drastic that I think we should be
aren't we finding shifting the goal? Because when is the reverse? I remember when the city started depreciating, even by 2% or 4%, you walk even into the marketplace, tomatoes that were produced locally. Oh, city need depreciating. Are we not just being...
There's a clear theory
behind
this. Classical theory that prices are sticky downwards. And they cut across everywhere. So the rate
there are some people who have defeated the gravity, the law of gravity.
Defeated. The rate at which prices will come down is not the same the rate at which prices will go up. That is why you should make sure that the prices will not begin to go up, because it won't come down as fast as you want. Well, and sometimes it may not even come down as long as you have the word inflation. It means that prices are going up. So that component, in every country, there should be a certain level of inflation. That is why we say that we have an optimal level of inflation of 8% plus or minus 2, which means that that level of inflation is supposed to support our economic development. Otherwise, we can bring it to zero.
And that is not good for business.
That will not be good. Yes,
the deflation, but
will not be good. So optimal level of inflation is there. So if you are buying this, let's say 10 cedis, right? You don't expect that with all these things that we are seeing, you go and this thing is 5 cedis. It won't happen. What will happen is that if it's supposed to be at maybe 10, it's supposed to be go to 15 cedis, you buy it at 11 cedis. That is a benefit. You have saved 4 cedis there. That is the optimal level of inflation that we are all.
So by January ending, we should see your members respond.
Oh, by January ending, the COVID tax will kick in. The benefit from the reversal of the decoupling of the NHI, all of them will kick in. If the city should remain
all the research are showing that it will be fairly stable.
Fairly stable. If you are likely to see the policy rates drop, translating into lower lending rates, if you are likely to see utility tariffs coming down, George, all of us will enjoy. I don't think that.
And so within 1 month, the prices still will go down. You don't want to play on the word drastic, but it won't
go drastic. It will go down. But when we see all these other variables and there is improved environment, all of us will...
Let me bring in Mr. Saki, who is the acting head of research at the Ghana Association of Banks. And so, Mr. Saki, help me out. All of that things being equal from the first Wednesday in December, the Ghana reference rate will come out, playing with the numbers of that 15.7%. When are the commercial banks going to really respond to this? The argument is that it often takes a lot of time. Help me out based on the data that you play with at the decision level in terms of the timelines for the commercial banks to act adequately.
Yeah, so thanks for the question. So if you look at the data carefully from BOG website, you can see that downward movement between policy rate and also the lending rate. And it's the impact or the transmission mechanism is instantaneous. You see once policy rate is dropping this month, there is that propensity that you see lending rate also dropping in the coming month. So it is not at maybe 2 months or 3 month duration that before you see the real impact of such transmission. And just like my senior colleague, Mark highlighted, in the goods market, they are making an argument from a sticky price perspective. Likewise, when it comes to the money market, we are looking at the issue of what weak policy transmission. There is no way we will have a similar magnitude of decline in lending rate as compared to that of the policy rate. So though it will decline, we shouldn't expect the same magnitude in that of the lending rate. And as I said earlier, there are so many factors that are taken into consideration. And then coming back to his earlier comment on the NPLs. One NPL, these are signaling variables. And the fact that NPLs are 2022 doesn't mean it applies to every customer. We have sector-specific NPLs, which help you to assess the creditworthiness of a particular business. Somebody is in the construction sector and is rendering service to government. and within 2-3 years, there's a change in government, and that loan become bad. At the end of the day, you see that the NPL level for such industry will be higher as compared to another industry where the NPL level is significantly low or even below 10%. So in computing the credit worthiness of these individual businesses, you should see some significant variation in the price at which they get credit. And I was happy when he shared a testimony of personal lending being at 15%. There are SMEs who are actually getting credit at 10%.
Wow.
Yeah, so it's important to get a dynamics that it is not static in approach. So basically, to sum up your response to your question, the response will be what? Immediate. Next month, you should see some significant decline in the lending rate as well.
But for the commercial banks, it will take some time. So should I give myself the next 30 days or even lower than that?
Yeah, precisely. I think that is doable. And once the new GRL is determined for the month, any loan that is contracted within that specific month, at least will have that impact or effect reflecting in their lending rates.
Mr. Saki, take me to the classroom here. And we taught in finance about or banking about a fixed rate and a variable rate. Now, this reduction that would happen in terms of the Ghana reference rate, what could be the impact of somebody who negotiated a loan with a bank, holding the rate, thinking that I'm afraid of the future, and somebody who said that, listen, I think the outlook is good, I'll do the variable rate. How would these reduction in the GRR, the Ghana reference rate, mean for a Joe Mansa who went to a commercial bank and said that, let me do a fixed rate? Kabina Mensah who went to a commercial bank and said that, you know, I'm optimistic about the future, let me do a variable rate. Can you take me to the classroom? Some education here.
Yeah, so for Ajwa Mansa who has gone for the fixed rate, at least you are betting against all odds. So basically, once you sign up for a fixed rate, irrespective of whether the rate are dropping, you won't see that effect in your at least amortization schedule. So, but there are instances where even though you'll be having fixed payment and all that, people can go back to the banks and then probably renegotiate and all that because people are that they are human beings. And maybe there's that likelihood that maybe they may reconsider their position and all that. But once it's fixed, I think that the position is you are supposed to make that fixed payment throughout, irrespective of whether interest rate is dropping or not. There's no way to affect your repayment rate. Concerning the other person who will go for variable, I think they will see the real benefit because the computation varies as per changes in the GRR. So once the rates are dropping, your repayment actually rates will also drop. And if it's increasing, I think we should expect similar increase in what the repayment. The same principle apply in FX as well.
I know it's something that the association often wants to detest or not get into. But if I do my projections, the outlook, we are still seeing inflation being the single-digit budget band. The fiscal side, all the institutions are pointing to a very stable market. If I'm going for a loan from maybe Mr. Magbedu Abuaji Bank tomorrow, would you advise me to do a variable rate?
Well, that will be predicated on analyzing the trend in governance. So these rates are determined by what? Fiscal and monetary policy positions. So we have to look at how we will anchor our decision based on the consistency in policy measures. So if we can trust the words from the fiscal and the monetary position, then it will be advisable to play this gamble, knowing that the rates are likely to be stable or may trend downwards going into the future. So it hinges on the managers of the economy, and that should be factored in doing the forecast and all that. So at least we've gotten the assurance from the central bank, at least hoping to see interest rate dropping below 10% and all that. That's an assurance. The rest boils down to their commitment towards these things. And if you can take their word by it, then definitely it will be advisable to go for a variable rate.
I would do that if I should walk into any bank to secure a loan. So, but I mean, quite convinced with the explanation that the assurance is giving to you that the banks are going to respond. It will be gradual.
Well, as I said, if the cut is very significant, obviously it's somehow instantaneous. You see the reduction. So the ones that they did, I saw some, as I said, some level of reduction. But I think that the banks are also businesses, and they are looking for opportunity also to sell their money. And so if they can reduce the interest rate for people to come for the facility, then obviously I think they should do that. I mean, the development of an economy, for me, is a partnership. So the banks will play their role, the businesses will now, because if they don't go for the loan, the money should be there. There's nothing you can do with it. Now that government is not borrowing with the T-bill rate now at 10%. Gone are the days where it was 25%, where the banks will take their money, give it to government, go and sleep, and make 25% interest and high profit. Now that trend is changing. Government is not borrowing, so you have no option than to give it to the private sector. We've seen a reduction in credit to the private sector, an increase in the credit to the private sector. And I'm sure that it's going to be sustained. That is where we'll be able to move our economy forward. In fact, if interest rates should come down and businesses are borrowing, the bank themselves will also do very well. They will make a lot of profit because non-performing loan will also go down. So we are holding them to their word, and obviously we are all here. We'll be analyzing, assessing.
Otherwise, we'll press their neck. I mean, Tuma Boy, it's not every business that is happy with these VAT reforms. And the typical group is Guta. They are not happy. They think that this, quote, so-called VAT reforms is rather going to complicate things for them and increase their cost of doing business. That is interesting.
Yeah. In fact, we have responded to Guta. And
instead of taxation?
Yes. Oh, yeah. No. We have an African Center for Tax Policy because we read their press release, and then we realized that they were focusing on two main issues. The first was the threshold. So when they mentioned the threshold, that is going to create a gap between people who meet a threshold selling the same item, and then the one below the threshold and selling the same item is going to create two price differentials. So we decided to trace the issue of threshold, and we went to 1998. Then it was 200 million. And the dollar equivalent was $86,000. Then in 2001, they reduced it to 100 million, which is today 10,000. The dollar equivalent was $13,000. Then in 2013, we took it to 120,000 Ghana cedis. The dollar equivalent was $58,000. Then the one we are practicing now, which is the 2015 one, 200,000. If you convert to the exchange rate, then it's $53,000. Then we try to say, okay, what is the 200,000 in 2015 value today in terms of dollars? And when we converted, it was $62,000. Then we concluded that, okay, then their issue is not really the jump from 200,000 to 750, because the value of 200,000 in 2015 is almost around the same in 2025 today. Therefore, their issue should not be the threshold, because 200,000 today, 200,000 in 2015 today is more like 750,000 today. Convert them in the dollar, a more stable benchmark, and you will get that. Then their second issue was that even if we qualify and I'm selling, and because I'm below 750,000, my brother will be selling with VAT because he is above the 750,000. I am below the threshold, so I won't be able to register. Therefore, my brother who is selling with 20% VAT is going to be priced out. Again, we took the numbers and we modeled, and we realized that those who are not registered, they are not entitled to the VAT input. So that 20% which government has given it back to them, they are not entitled. So they import, they have to cost it. It has to form part of their cost. So the conclusion was that the margin is around 1.5%. Then we said, okay, then it's not a big issue.
It's a big issue.
So we actually called for an engagement between Guta and GRA. If they understand that not so much is changing. And again, you need to focus on policing big organizations.
So, I mean, it appears that their issue doesn't...
Their issue is more of understanding the matters.
Time is not our good friend, but Mr. Saki, your final word from the perspective of the association as well, going forward, policy rate going down. Your final thought, please, Mr. Saki.
Yeah, so as it stands now, we are all happy with the policy coordination and then its complementarity. And as a banking community, we also at least contribute towards this particular agenda by at least extending credit to the real sector of the economy. We only pray and hope that at least the managers of the economy will be diligent and also at least stick to their commitment towards at least economic stabilization and development.
Okay.
But more importantly, we should take our time to build a robust economy so that we will not be that susceptible to a lot of external shocks.
Yeah.
And that's if as a bank community, we are ready to support the real sector of the economy. Thank you.
Mr. Mobo, your final thoughts?
So I think that I agree with Saki. There's coordination. Government doesn't mind losing revenue. There's like I want to borrow your word. There's a big gamble on the compliance. So we encourage businesses to support the GRA. Otherwise, we are going to see a situation where multiple taxes are going to come because mostly, and we've seen this cycle before when the previous government came into power. The first years were very good. Then as we go along and compliance started falling, we saw new taxes, including the e-levy, which wasn't so good. So we hope that the business community will support this compliance and government will, maintain the momentum. We need a sustenance. They should be, the balloon should not be.
So, I know your prayers have been answered, policy rates, VAT, and all the rest.
I think gradually we are getting there.
Okay.
We are creating an enabling environment that will stimulate private sector activity, that will help businesses to make profit and expand. And obviously, all of us will benefit. But let me also assure you that if all these things are sustained, what we are seeing, lower inflation, policy rate going down, with this VAT reform, I'm sure that maybe by the beginning of next year, when we start implementing, you will see a drop in prices, and all of us will benefit. So
mark the time assured. And the date.
So be rest assured. In fact, mind you, the businesses are also consumers. So they also go to the market and buy things. So when prices are down, we all benefit. It's only then that we will be able to also reduce...
there are some CEOs who, when they walk into their shops, they just pick it, they don't pay. Their restaurant, they eat, they don't pay. The hotels...
Maybe they are like you.
Well, that's how we draw the curtain down on PM Express Business. I know the debate will still go on in your homes and your offices about the real reliefs of these things, the VAT implementation, and also the cut in the policy rate, and how businesses can be compliant to help government raise the required revenue to help stabilize and improve the economy. My name is George Wiafe. Indeed, have a great day. This has been PM Express Business Edition.